Okay, good morning, everyone. Good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza. I'm happy to be with you guys today. Apollo, yeah, you the early bird catches the worm. I've seen you, Apollo. You're among the first people to join. Yes, you had inquired about the COT, and I'm going to get to it in a moment. I'll get to your COT. Let me just see if I can add it here. So we shall just review the COT there. Yeah, so welcome today, guys, for the episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you all today, talk you through the markets. Today is the 16th of August, and let's quickly see what's been moving markets. So yesterday we had retail sales data that was released, and of course the retail sales data came in as a bit of a surprise to the markets. We saw the number coming in sharply higher at about 1%, and of course this sent some shockwaves in the market. We saw the dollar recovering very strongly, and I think this report also put to rest the narrative we had been seeing in the market about recession fears in the US. And of course, I believe the recession fears had been a bit too extended because they were basing the recession fears were based on only 1 month of data, which was the NFP reading we got for the month of July. But looking at the retail sales number, it's showing that the American consumer is in a good shape, and we are seeing quite a pickup in prices for a number of things. And this number, of course, benefited the dollar. But you can see based on trend from September last year, we have not seen such a sharp reversal from like the one we had for the month of July, where we saw the number ticking higher at 1%. It's been averagely trading above 0.2%, and of course, going into retail sales, it was expected that we would have a positive number, but this high number, of course, indicated that things are looking quite good. So reading through this US Census Bureau, it is indicating here that it was the biggest increase since January 2023, with sales at motor vehicle and part dealers rising the most with 3.6%, followed by sales at electronics and appliance stores. And of course, this benefits the different sectors, most especially FMCG. That's why when you come and check on the movements for a number of things in the markets right now, we are seeing a number of things higher today. Like the indices sharply rose, of course, on that report. We also saw the tech stocks sharply higher. We're seeing like the Nasdaq is currently trading around 19,600. Looking at the various stocks, most of them closed in the green yesterday. Pre-market for the US is not yet open, but it's likely that when a pre-market opens, we are going to see a number of these stocks, in the green. Crypto looking quite bearish. Of course, I believe there must be just general seasonal changes there. Maybe people are moving money out of some of the cryptos, but of course, most of them are off their lows that they saw earlier this month. Looking at the news that we've had today, there's a lot of optimism in the market. Risk sentiment is high. Euro stocks are sharply higher. And of course, we are seeing Nikkei is also sharply higher. It's been posting good gains ever since we got some comments from the Bank of Japan that they were going to come in and stem any market turmoil that would come in from whatever policy changes that they are making. Looking at the calendar for today, we do not have that much of market moving information, and I believe the days with the most market volatility was yesterday and the day before. But today, there are quite a number of trading opportunities, especially if we get a higher number there for the building permits that is expected to come in higher. As you can see, generally we've been having a relatively good number for building permits, and of course, that of course is benefiting the dollar quite nicely, and of course some of the stocks. We're also looking forward to the Michigan consumer sentiment, which is expected to come in at 5 p.m. today. And of course, we are going to be looking at the forecast for inflation. Of course, these forecasts are going to give us an indication of where we can expect the inflation path to move. But basing on the recent print we got for CPI on Wednesday, we can say that the Federal Reserve is on track to cut rates in September. and the rate cut is going to not be at the beginning of the month, especially after the NFP reading we got. The rate cuts had been seen as bad news because that would mean that they are doing it as an emergency action. But this time around, the rate cuts are going to be a good sign for the markets, and I believe that's why we are seeing a lot of rallying going in. Yesterday, we got a very nice article here about the US presidential election, and there's three scenarios for the market. So I thought it would be important maybe for us to just briefly go through it. You can always go online and look for this report and read it in detail. But we are seeing here, we are going into the period of elections. Kamala Harris and Donald Trump will be having a debate sometime in September, and they will be facing off, I believe, on Fox TV and CNBC. So we are going to wait and see how that debate plays out and how things are looking. Now, when you look at this table here, which is created by ING, they're organizing it out in a way that it's divided into two. We have Donald Trump, which is here. It's indicating here, it's saying that three scenarios for financial markets: the policy drivers and macro impact, and then of course the market impact. So here we are focusing on Euro USD, and of course the US 10-year, and of course credit spreads, and then the price for oil. Now, first thing is it's saying here that Trump clean sweep or a Trump presidency, Republican House and Republican Senate. The domestic policy here, it's saying that enlarging the 2017 tax cuts the priority. New immigration controls, of course, that has been one of the main things in Trump's campaign, that he wants to stem on that big immigration that's coming into the US. No meaningful fiscal consolidation. They're saying a foreign policy, less support for Ukraine and Taiwan. Trump focus on domestic growth and jobs, tariffs with China, particularly exposed. Of course, the other thing, of course, that Trump has been indicating that he wants to stem the IP theft that China has been that's been happening with China. China has been stealing a lot of intellectual property, especially from the US and Europe. So that's one of the things that Trump actually introduced in his presidency, and I think he wants to now come back to see that he continues with that. Now, the main important thing for us traders, aside from the different policies, is the Fed policy impact. Now, that's where we need to pay particular attention, because this is now what affects us. Now, here they are saying a loose fiscal policy likely to be accompanied by tighter monetary policy if the Fed is serious about hitting 2% inflation. They are saying that here, if this happens, then of course we are going to see a much stronger dollar, and that is where you're seeing Euro USD is likely to sell, possibly even going below parity at 1%. Now, I think this is something that is most likely not going to play out. We are most likely going to have, I think, option 3 playing out. Just generally looking at where we're expecting the dollar to go to. So they are saying here that lingering inflation, fears from tariffs and tax cut extensions may make the Fed wary of cutting rates too much in 2025. So they are saying if this occurs, then of course we are most likely going to have a relatively stronger euro. But of course, the euro might dip a bit down to 1.06, and of course 0.98, and then of course going to 1.03. They're also expecting that we might also get a resurgence there for the US 10-year, and of course credit spreads are likely also to rise, pushing themselves up to even 4.9%. Now, I'm also thinking scenario 2 is highly unlikely. And looking at this table, I don't know why generally we are looking at as Harris presidency is what will be good for the market. I don't know why, because when I look through the forecast like ING has for Euro USD, if the euro is going to reach this high, it would mean that we are going to also see new highs for the indices and also for the stocks. Now, you also notice that with the Harris presidency or Kamala Harris presidency, we also see a relatively higher oil price, moving as high as $83 a barrel and staying, of course, above $70. Now, looking at the Fed policy impact from a Kamala Harris presidency, it's saying here that Fed feels more onus on them to bolster US economy given less fiscal support. Now, what this means is that the market's ideally looking at Harris presidency as one that will favor the stock markets more, and we are most likely going to see higher levels for the euro, possibly even for the stock indices. Now that's what we have for now. And of course, you can always take your time to go through this report in detail and see what more. It's a very, very detailed report, so you can always find it on ING Think and go through it. Now, the other thing that we also need to go through is the expected rate cuts that we're expecting in September. We're already seeing some optimism in the markets. We are seeing euro dollar relatively bullish. We are seeing pound dollar also staying relatively bullish because Jerome Powell is likely to cut rates, in next month, which is just next month. Now, here it's saying that markets trim bets on aggressive rate cuts, but uncertainty is still high. And of course, this report was a report for the 13th of August, which meant that it was not pricing in yesterday's retail sales number. And of course, it also did not price in the number that we saw for CPI on the 14th. So I would say it's a relatively old report. Now, I would say that the rate cuts are now going to be aggressive simply because we saw the dip on inflation. CPI came in on headline at 2.9%, below that 3%, and it's now moving closer to the longer term target for the Fed. So it's likely that based on the CPI report we got for Wednesday, we are now on track to get at least 25 basis points rate cuts. That's going to be in September. Okay, going over to the COT. So we had some requests from some of you that you wanted us to review the COT report. So I'm going to go through the COT report briefly to see what it's currently looking at the moment. So we are going to start with a few things. Let me first start with the US dollar, the dollar index, to see what it's currently looking like. So for the USD index, currently we are seeing some positioning. For the dealers, we are seeing they have 96 long positions. However, if you look at the short positions actually quite pronounced here, especially for asset managers that are relatively long term and the dealers that are short term. Now, this big print we have here for rather the big positions we have here for the dollar that is on the short side. I think this could be in anticipation of policy shift. Normally, asset managers and institutions do not change short over the short term. For them, they are normally long term looking. So the Fed hiked rates for the first time, I think, in 2022 after a long time, and they ended the rate hiking cycle in December last year. And it's at that point, that meeting they had in December last year, that they indicated that they now want to move into cutting rates. So I believe right now we are relatively positioned for a weaker dollar just by looking at the COT. And it's only leveraged funds, however, that are holding quite a big position there for dollar longs, which of course tends to switch sides. Leveraged funds is those who are trading on margin. So most retail traders actually within this category here. So I think for now, I would say the market is more skewed towards a weaker dollar, especially going into September and the rest of the year. Now, moving over to something else, maybe we can check out the gold. We can just go to the metals and check out gold. Now, for gold, this is how things are looking like for gold. If you look at the producer, stroke merchant, stroke processor, stroke user, they're holding a 63,782 short position. Swap dealers have also racked up their short position for gold, likely maybe because it's trading at elevated levels. They're holding 278,000 short position there. Managed money, however, is still holding a relatively big position here, as you can see. Uh, it's about 180,000. And you can see for the long positions, managed money has a much bigger percentage. They're holding 37.5% for the long position. So I would say gold is looking upside at the moment. And you can also see for the past week that we have had a cutback there on the swap dealers, and we have also had a cutback there on managed money, which means more people actually switching to long than short trades. All right, so that's it. So let's cross over to the MT5 and see what's happening over on the charts. If you have any questions, you can drop uh, and I'll be able to come back to the questions later. Okay, so let's start with Bitcoin. So for Bitcoin, this is the last time we discussed Bitcoin. This is how Bitcoin was looking like. We'd say that it's been stuck in this Davos box for quite some time, and we've been having quite a number of liquidity grabs off these levels here, where Bitcoin has been trading, has been moving to trade, above 60,000. So at the moment, there's a bit of indecision for Bitcoin within this box here, and it's having a bit of hard time maintaining price action, especially above 70,000. Uh, if we get a break for Bitcoin above this level, then it's very likely that we are going to get a sharp move to the upside. But for now, price action is still stuck here, and it's most likely going to stay there for now. Now, crossing over to the Dow Jones. Dow Jones, I would say I was quite bearish this week on the Dow Jones. I think until yesterday when I saw that retail sales number, I was skeptical that us having lower CPI would actually be bearish for the Dow Jones, but of course that didn't happen. We've been seeing a relatively sharp move to the upside for the Dow, and of course all this is on the back of there's no recession that's going to happen in the US, and a lot of the components within the Dow, especially uh, you know stocks that tend to not do well during recession or during low economic growth and low inflation periods. Those ones rallied sharply. The Coca-Colas, the Walt Disneys, financials are also looking good. So most of them were rallying because of that. Now, Dow Jones is currently trading at 40,630, and we are seeing a move that could likely take it upwards to 40,926. Now, right now, I would say there might not be, I would say, a good trading opportunity today on the Dow. However, if you're going to trade it, most likely you have to have an upward look for it, that it's possibly going to move higher. If you move maybe to the 15-minute to see how the price action is looking like, price action this morning is looking quite bullish. We are having some ranging, however, at this zone here. Maybe the best way to look to it could be to potentially wait for a retracement and then look for a buy. We've been having very, very nice retracements here for the Dow. Yesterday it gave a lot of opportunities for deep buyers to jump in. Like yesterday, we saw that nice spike upwards to 40,543 before it dipped down to around this level here before you were buying. So for the Dow, we might look to have buy limits around those levels of 40,500, expecting it to move higher. The other thing, of course, is that you might want to keep an eye also on order flow to see how the stocks do today. If the stocks trim on their gains that they made the past 2 days, then it's likely that we should see a temporary pullback before we resume buying. Now, going over to the Nasdaq, Nasdaq had launched a very sharp rally to the upside, and of course, this rally took it upwards to that level of 19,660. Now, rather 19,550. Now, Nasdaq tends to perform well during periods of low inflation, and I think that's why we are seeing its move was quite aggressive. And of course, also what pushed it higher was the strong performance on Nvidia and also some other companies like Apple. Before I move over to the currencies, I also want to speak briefly about the Dow. Nike, I'm sure most of you know Nike. Nike was up about 6% yesterday. That was after one of America's top billionaires, is called Bill Ackman, took a big position on Nike that actually pushed Dow Jones. That's why Dow Jones is trading much, much higher yesterday because of that move higher on the Nike. Now, for gold, I'm going to analyze gold on Trading View since that's where most of my analysis is. So just allow me to cross over to to TradingView to take you guys through gold. Okay, so this is what we have for gold. So if you come and look at if you look at gold on a 4-hour time frame, this is how things are looking like for gold. After the CPI reading, first of all, I'm sure a number of you are surprised why gold sold after the CPI. Gold had to sell after CPI simply because it had a hurdle around this level of 2,480. We failed to see gold sustaining a break after several attempts. Okay, so it gave up after so many attempts. It tried this level on the 17th of July, failed to break it. Tried it again on the 2nd of August, failed to break it. Now, it made 3 attempts. Within this week, it has made actually 4 attempts at this level. And then after the CPI report, we saw sellers coming in and overwhelming the buyers, taking gold back to these levels. Now, gold has, however, had a significant demand at certain levels here. You can see how we had a relative break below that level, taking us to around 2,437 before buyers jumped in. And you can see these sharp moves down here that took gold back. Now, what is helping gold to stay quite elevated today is silver, which also trades, the same way like gold, has been printing new highs. We also saw silver have a bit of uh, upside momentum, especially since it failed to maintain price action down to these levels. It's now steadily moving higher. So if we keep seeing silver tracking higher, possibly breaking towards $30, I suspect that gold is also going to move higher, and it could possibly aim for 2,480. So how to trade gold today? You might want to focus on looking for some buys. However, with relatively tight stops, if we see it moving closer to 2,470, we might possibly get a break that could take gold trading higher to those levels of 2,500. Now, the other catalyst that has been giving gold a lot of bullish momentum has been the escalations of the tensions between Iran and Israel. But the fact that the tensions have de-escalated quite strongly, but gold is still looking elevated, simply means that now it has depegged itself from tensions and it's now purely a demand move that could hold for some time. So let's cross over to the MT5. So we're going to cross over to GBP/USD. So GBP/USD yesterday had strong downside momentum as a result of the strong retail sales number. But despite that retail sales number, GBP/USD is actually trading higher, which of course, tells us that it's a bit of a surprise, because the retail sales number actually came in stronger for the dollar. But the previous number, which was a CPI number, was actually bearish for the dollar. So markets are trying to find their ground. We are still seeing markets digesting that number. Yesterday after the retail sales were released, we saw a very sharp sell for GBP/USD that actually took it strongly lower before it immediately reversed that entire move. So this red candle you guys are seeing here is actually from the sell for the retail sales. It created a bit of a trough around here before creating strong imbalance and breaking structure to move higher. So for us to see surely how the retail sales have been digested, and to see if it actually means that we're going to have stronger dollar going into next week, we need to wait for how the price action evolves. One of the reasons why uh, GBP/USD has not stayed lower despite yesterday's retail sales number is because traders are still short-term bearish on the dollar, especially since the rate cuts are soon. When the Federal Reserve starts cutting rates, GBP/USD could launch a very sharp move to the upside. So now we have traders already keeping up on those buys that could possibly move it higher. Now, technically looking at things on our fib levels that we have from this week, GBP/USD is currently trading towards this golden ratio of 1.29045, and we might be looking for buys that could possibly take us to that level there, especially looking at a relatively weak DXY this morning. We might get buyers coming in today that could take the pound higher towards this level. And of course, if it moves higher towards that level, we are going to see it reversing this entire move and possibly going back as high as 1.30437. So for now, we really have to just observe the price action, especially going into the US session, for us to see, can GBP/USD actually hold this move? Because if it doesn't, then the reversal is going to be strong, and we could see it moving lower to those fib retracement levels there of 1.28184, 1.28615. Now, the other thing that would give me confidence to buy GBP/USD on the technical side of things is the golden cross that has currently formed on GBP/USD. And of course, this golden cross is indicating to us that we might get more upside momentum for this pair to those higher levels there. Now, looking at USD CAD is a very, very tricky pair at the moment. I drew so many chart patterns on it over the past few days. The first one was a descending wedge, which I thought would be a nice break to the upside. Yesterday, we got the retail sales number, which kept this pair range bound. It didn't do anything. It didn't even react at all to that retail sales number. And for now, I'm observing to see which side breaks first. It's very likely that we get a break to the downside before we get a break to the upside, and we should be looking for sales for USD CAD towards that level of 136,727. Of course, if we fail to achieve this level of the fib, then I think we are most likely going to get a reversal that could take us upwards to this golden ratio of 1.38055. Now, I would be more skewed to look for a sell on USD CAD, especially going into September. Uh, that the dollar longs are going to cut back quite aggressively in the instance of a rate cut. Now, for those of you that can pay close attention to details, you can clearly see there on the H4 time frame that we actually have an active death cross that has occurred on the USD CAD on the 4-hour time frame, indicating that we should see more downside for this particular currency pair. Now, for Euro USD has had strong imbalances that have been created over the past few days that had provided me some bit of confidence that I should be looking for sales. But even after yesterday's retail sales number, we are seeing that the markets they seem unfazed by it, because we saw that initial sharp sell on the 15-minute. You can see how big the candle was for Euro USD. We saw that sell that was almost around, that's about almost, this was a sale of about 60 pips. But initially, after that move to the downside, we are now seeing a very steady recovery there for Euro USD, and it's now moving steadily higher. Now, I do not know how far up Euro USD is going to recover, but the reason why we are seeing that strong upside momentum today and over the past few weeks has been on the back of unexpected cut by the Federal Reserve. Now, going into today, I will be I would expect that we'll go in for buys for Euro USD towards that 23.6% level for the fib, but I'm also keeping my eyes on for a potential reversal, since we're slightly above that midway point for the fib, which is 50%. If we fail to hold price action above that fib level of 38.2%, then I'd be looking for sales for Euro USD that I can ride all the way back into this area of demand, which we are in just this week, by the way. This was just on the 12th of August, so we should see a retracement back there. So, which direction goes first will majorly depend on the DXY strength. Looking at the DXY right now, it's not looking too strong from that retail sales number. It actually seems to be reversing its bullish candle. If we look at it on trading view, let me just go to the DXY quickly. Just a moment. So yesterday's reaction from retail sales was actually strong bullish for the dollar, and it was easy. I mean, for most traders switched dollar long after that report. Uh, but looking at how things are moving today morning, I would say, now we could quickly now switch back to having sales on a dollar. Uh, there might be some chart patterns here. I'm seeing almost some kind of descending wedge on the 15-minute time frame. But if you look at how the DXY has been performing over the past, if you look at how the DXY has been performing, okay, just a moment, I need to get my screen shared. All right. So the DXY is forming this on the 15 minutes. This is not a reliable chart pattern, especially since when you're drawing chart patterns, you should focus on the general bias in the market, which is that the DXY is actually bearish for the time being. Go on your 4 hour, and you can see how we have failed to sustain price action to the upside. DXY is looking quite bearish at the moment, and it should possibly sell now. If we see DXY breaking that descending wedge, we need to wait for the 4 p.m. candle, which is going to start at 4 p.m. We need to wait for how that candle evolves after 1 hour. It's a 4 hour candle. So you need to wait for how the candle evolves at, say, rather around 6 p.m., 1 hour after the candle has opened. So if we see a break to the upside, then I suspect we should see some selling coming in for the euro dollar and for the pound dollar. But for now, DXY is looking relatively bearish, and it could possibly continue with that. Now, the other thing is that we also have a double bottom on the DXY on the 4 hour time frame. You can clearly see it here. We had two grabs on liquidity along these levels also, indicating that the sellers seem to be the sellers seem to be exhausted, and we should see some temporary move to the upside for the dollar index going further into the month of August. So for now, it's just a wait and see, and we expect to see what happens over there for the dollar. Yeah, so I think it's question time now. I think we've been able to go through most of the assets that I wanted to go through. So question time. If you have any questions, let's go over them. So Apollo, you're saying hello, Norbert, waiting for you and hope we shall look through the COT. So I think that we looked over it. I think we went over those, Apollo. You must have paid attention to those. Does summer holidays affect volumes? Not quite. I would say for me to really say yes to that would really depend on if I've really gone through the data. From a data standpoint, I can't say they do. I have to look at the data more critically for me to give you an answer to that. But definitely seasonality, of course, usually due to summer holidays, we normally find the volume is normally trimmed, and of course, we do not see a lot of positioning taking place in August. So we need to wait for after August for us to see generally where the trend is at. Yeah. So definitely seasonality plays a part. It does. GPP CHF and USD CHF. I don't have any analysis for GPP CHF and USD CHF at the moment. However, maybe just to briefly go through USD CHF, we saw a very sharp recovery for USD CHF after the report yesterday, and this, of course, we saw this is in line with how it's been moving over the past week. We've been seeing USD CHF steadily moving higher around there, and I think this is likely to continue to the upside. However, like I mentioned earlier, the dollar is extremely vulnerable now to further downside, especially since the rate cuts are around the corner. And of course, traders are going to be increasing their dollar longs as we go into dollar shorts rather as we go into September. Okay, next question. Apollo, you're saying on BTC, how comes approvals for for ETFs and supposedly huge positions by BlackRock hasn't moved the BTC price up. Apollo, I think Bitcoin is having a struggle to move to the upside, mostly because of sentiment. Sentiment is not bullish sentiment has not yet settled into the crypto market as yet. Where we are not yet seeing the FOMO as you know it. The FOMO hasn't yet gotten into Bitcoin. The other thing, of course, is that I had thought the ETF inflows, the launch of the ETFs would spur more, you know, increase for uptake by crypto. But despite that, we are still seeing asset managers are still only taking up a small portion or putting a small portion of their portfolios in ETFs. And of course, this is due to the volatility that comes with some of these investments. So they are focusing more on the stocks. But I think soon enough, if there's ETF inflows increase, and possibly also if we get the launch of the Ethereum ETFs, that could also help to boost the price for Bitcoin. Yeah. Any live signal? For now, I don't have any at the moment. Price action is relatively choppy at the moment. However, if we look towards gold is looking bullish, and we should see potentially further upside for it towards 2,480. We should possibly see gold moving there. Euro USD is also having a bit of hesitation, which might stay for now. However, if we fail to see a break above that 38.2% fib level, then we should be looking for sales for Euro USD towards that level of 1.08940. Awesome. Next question. Hello, sir. Could you explain NFP? So NFP is a non-farm payroll in full, and it shows employment numbers for different sectors aside from the farming sector. And of course, this is a key metric for traders simply because it indicates to us how the employment sector is doing in the US. Usually, if we have a high NFP number, it's normally bullish for the dollar, and it tells us that things are looking good for the employment sectors for the different sectors in the US. And of course, if a number comes in lower, that's normally bearish for that number. Now, in addition to the NFP, which is a non-farm payroll number, we usually also get the other other data like the participation rate, labor participation rate. We also get other data like the unemployment rate, which also comes in also around that time. So all these metrics affect the dollar, and they are normally good trading opportunities for assets like Euro USD, GPP USD, and gold. Those tend to react most to the NFP number. So I hope that helps, Collins. Next question. Your view on inflation parity. UK has managed to bring down inflation faster than USA, fueling expectations of faster rate cuts by the UK, which may affect the pound. Retail sales and CPI may shift the Fed rate cut. I'm not too certain of the Bank of England rate policy direction. However, I know that recently they cut their rates by 25 basis points. And of course, what that did for the pound is that we saw a relatively weaker pound. And that's why the pound has not been rallying as much as its counterpart, the euro dollar. However, Bank of England has indicated that they are going to look into more rate cuts that would possibly, provide some downside momentum for the pound dollar. At the moment, the federal funds rate is still higher than the Bank of England benchmark rate. So that would mean that we are relatively going to see a relatively stronger dollar for now at the moment, and we shall see how that evolves eventually. Yeah. Regarding the Fed, the recent CPI number came in lower at 2.9%. Of course, it's not at the target for the Fed, which is 2%, but it's still a lower number, indicating that inflation is declining. What will happen to USD/CHF? For USD/CHF, we're still in a steady uptrend. However, there seems to be some kind of an extended bearish flag forming on it, indicating that we should see more downside. We could potentially see a downside for it going into the next week. towards those levels of 1.085 and even lower. So I think that's it, guys. Thank you so much for joining me for today's episode of Market Snapshot. I wish you guys all a happy weekend and a happy trading into the US session. Cheers, guys, and all the best.